Welcome to TheoTRADE. This is Don Kaufman. It's February 14th, 2025. Just about 20 minutes to go to the cash close on this Friday afternoon. Of course, it's Valentine's Day. You got love at first trade. I'll tell you what, though, in today's trading, there's not much to love in today's market. There's not a lot going on. This is massively unchanged with minutes to go in the trading week. Let me break down quite a bit for you here, of course, in this TheoTRADE weekend update. Market unstoppable. Prepare for the massive gamma squeeze. Because people, it's coming. All right. Let's get right down to it. So I was saying, nothing happened today. When I start talking about nothing happened today, well, there's two aspects that really lend itself to absolutely nothing happening today. The number one is right out of the gate this morning, we hit the upper expected move in the SPX. Obviously, I talk about SPX, the expected move incessantly. The expected move was exactly 97 points, off the start of the week. So right now, where are we? About 90 points higher on the week. So you can sit here and you can, talk about it. It's unfounded. It's a massive move. It's all-time highs. Truth is, we did exactly what we expected to do. And when we rallied to the upper edge of the expected move and we basically just stopped at that point. Take a look at the volume in the S&P futures with me here. We're doing about 800,000 contracts, which is, wow, incredibly light, unfounded. In fact, here, take a look on the daily chart. This is the daily chart of the S&Ps. I'm going to even close up the left side bar because it is rare, people, to see this kind of activity. In fact, the only time you see this kind of activity, you got to go to like trading sessions before and after Christmas. And, and ironically, and I know we have 20 minutes left, it was even, it was like December 26th, the day after Christmas, we did this light of volume. And I'll just be honest, it's just not the kind of thing you would expect for a marketplace that's cracking into new highs. But you start to get, and I was talking about this on Wednesday, this market like feels unstoppable. I even used the terminology of it's invincible on Wednesday, and I'm going to kind of further that a little bit here. So first thing that we really want to look at, and again, it's all about price action moving forward, right? First thing that we want to discuss, I'm going to switch to 180 day, again, 180 day, 4-hour chart. And the reason that I tend to do that, and I'll kind of zoom in a little bit on this one. Here we go. Kind of close up that left side bar and I'll box things out for you for a second. I've been talking extensively about, well, this range, and where are we right now? And the answer is basically we've popped our head right now effectively to the upper edge of that range. And in doing so, it starts to create this just mass of gamma risk that could just explode upon us. And I've explained this before, but some people may be a little bit new, but here I'll kind of break it down for you. The longer you trade inside of a very, very tight range, and this is a tight range. I mean, let's just, quantify it for a second. You have this $6,000 product. That's the S&Ps. And the S&P is the entire marketplace, right? So there's $6,000 product. And it's just basically channeling back and forth in a roughly 200-point range. We're channeling from roughly 5,900 to right up about 6,100. We've been doing it basically since the election. So it's all the way back here in like early November. And here we are in mid-February, and we're in the exact same range. So what's going to happen is you're just going to build and build and build and build and build. You're building open interest in the options marketplace. And in doing so, it's like this snowball effect. You don't know if we're going to break to the upside or we're going to break to the downside. But right now, unequivocally, we are breaking to the upside, right? But we're right at that like key threshold. Like, have we actually broken to the upside? Yes, but we haven't actually seen the full-fledged squeeze. And that's why I said we're on the doorstep right now for the squeeze to the upside. And that would just be a shock, if you will, up, like another 100 points, making it very, very definitive. Okay. But the exact same time, I'm going to say this, we haven't broken it yet. We just haven't broken it yet. And I'm also going to further that with, as I said, everything I like to do is like, forward looking. You're right here. Okay. And this massive risk is just ready to explode us higher. And the reason that that happens is, okay, when I talk about like, oh, it's a gamma squeeze, oh, it's gamma risk, basically it's, proprietary trading firms, market making firms, they have to hedge in the dynamic of the marketplace. If the marketplace breaks to the upside, everybody has to buy, and then all of a sudden it explodes. And the reason it explodes is you've been in this tight range for a long period of time. Okay. Moreover, not only have you been in a tight range for more, this period of time, no one's ever traded up here. So there's this incredible amount of risk at the upper edge of this range. Okay. No one has hedges really up here. So we have to buy to hedge as the marketplace goes up. And that's just, a fact of hedging out there. So we are right on the doorstep of just that. Now, okay, here's my opinion piece, which I'm going to further here in just a moment. My opinion is we actually are initially going to break to the upside before coming very, very rapidly back to 5,900. That's my thinking in it. And we may have to go 100 points higher before we actually collapse back down. And I'm going to tell you why. Okay, I believe that. And again, that's there's a portion to this that's a little bit of science and a portion that's, a little bit of an opinion. The science behind it is like, look, we know how much gamma is in this area. Okay, that if we just go a tiny bit higher, we're going to explode up. Okay, although I can't tell you right now, maybe this was the explosion up and we're ready to implode back down. All right, but we're top of the range. There's massive gamma over there. And this marketplace this week, when I talk about this week, I'm going to cruise back over to the SPX. This week, from where I sit here, you really do feel like it's unstoppable, like it's invincible. And I'm saying that because, CPI comes out, right? And CPI, it came in hot. Like that's not good. Inflation, it ain't dead. Okay. Then you had like tariff talk, and the tariffs are a little bit into the future, but who knows? Like everybody should be a little bit afraid of some of the tariff talk right now. And the market just kind of, brushes tariff talk off and brushes off like we don't need no stinking inflation. And then the final one that really got me this morning is like retail sales. How do I say this eloquently? They sucked. It was the worst in 2 years, right? So does it matter? Okay, doesn't. It absolutely doesn't. So you're getting all of these known events that are coming out. I say known events. They're known, ahead of time. It's going to be some type of exogenous event, some type of catalyst that you're not looking for that can really spark some volatility in here. So the point that I want to make with this, okay, and the reason I'm kind of taking you into a little bit of detail about, it's a gamma this and a gamma that, okay, forget about that for just a second. Push that aside, okay? Now I want you to think about volatility. Now, we all have to agree volatility, right? It's come down a little bit, but okay, it's lying dead on the floor right now. I think we have a floor in volatility somewhere right around this 15 level. It's basically where we are, right? We're trading like, 1483 in VIX, okay? But that's also kind of unusual given the fact that we're at all-time highs. The marketplace, the point that I'm trying to make with volatility, and I'm going to further this in a second looking at VVIX, and we're going to look at SKU, and we're going to look at, vol futures. I'm just going to make the point right up front, and then I'm going to describe to you exactly, what's behind that. When you start looking at this, though, and the VVIX and the SKU, but the VIX alone, okay, when markets are trading at all-time highs, VIX has usually been out of the 10 or 12 region, okay, and it's considerably higher right now. And we'll see if that remains, okay, but with markets at or near all-time highs, you would expect the VIX to collapse a little bit more. It hasn't, okay? Why? Well, you know what? Okay, none of the volatility indicators have actually collapsed. If you look at VVIX, the volatility index, okay, so this is VVIX. Here's something interesting. The VVIX will actually close today, and it's a little weird to see, but it'll actually close higher today, right? And the VVIX is, those that are actually hedging in the VIX product itself. So there's hedges going on over here, okay? Now again, why is this going on? Well, let me bring this to summation, and then we're actually going to even look at SKU and vol futures. The marketplace can't relax. The marketplace doesn't trust itself. That's the summation of it. It doesn't matter, what I think here. Okay, there's not, in a lot of products you look at, like I was like, oh, I think the market's going to do this, and I think the market's going to, sell back off. Okay, and that's, a little bit of a opinion piece. And there's some subjectivity to that. But when you start looking at VVIX, all right, you tell me, why do you think volatility won't calm down? Okay, because VVIX won't calm down. When the marketplace is at all-time highs, look at like a 3-year in here. Okay, basically since the Trump administration has been around over here, that VVIX is okay. It's definitely elevated, definitely elevated. It came down briefly after the election, but it's been very, very elevated. Like it just doesn't trust what's going on in the marketplace. Maybe for good reason, right? It's hard to actually handicap what this new administration is going to do. And I'll further that with the last portion, last two portions, which is vol futures and skew. If you take a look at the volatility futures and forget about the 5-day vol futures, those things are toast. Okay, so five-day vol futures don't really count. But if you look a little further out, what I want you to see is the distance between March and April. It's really, really tight. So what that basically implies, okay, because you're looking at volatility 32 days out and 61 days out, and it's 17K15. Let me unfreeze the screen over here. So this is 1715 and then 1777. Basically what I'm saying is this is the 31 days, okay, or 32 days in this case, and then 61 days out. The distance between these, okay, is nominal. And then the reason is the volatility, okay, is relatively high versus where the marketplace is trading. And again, it's because the marketplace, it's not ready to succumb to the idea that there's no risk. That's, again, that's the non-subjective portion of this. And I'm trying to give you every little nuance over here, right? So you see VIX won't, come much under that 15 level, and it could drop in coming days. I'm not, it could definitely drop a little bit more, but the vol futures kind of point to an uncertain future. Okay, the VVIX is clearly a little bit afraid. It's still at the 96 level and higher today. And the last thing that I want to mention on that front is skew. And the skew is still incredibly elevated. And again, I'm going to look at the entire history of skew and just make a quick point. When markets are trading, okay, at all-time highs, skew, it's just never sustained these levels before. And what that basically means and what it implies is there's a lot of hedging going on. The VVIX confirms that. The volatility futures confirm that, all right? The marketplace right now is on edge. And it doesn't, by the way, that is in no uncertain terms. That doesn't mean that we have to sell off, not at all. Okay. It just basically means that those hedges won't go away because, this marketplace just doesn't seem to trust itself as far as it can throw it. Okay. Continuing on. So we talked a little bit about that top of the range and some of that massive gamma risk, and that this marketplace very easily can explode, if you will, considerably higher. Right. So, and it's something that you really, you do have to actually have some degree of concern specifically about, whether you're long or you're short. We explode higher and then all of a sudden there's no volume or anything, we can implode. It's a big portion of it. And the marketplace would be fine even with a sell-off because it looks like, traders are hedged out there. There's also another kind of concern of mine here, and it has to do with some just really marquee underlyings. Like a look at Microsoft. And I was talking about this again last weekend, and I talk about it again this weekend. Microsoft basically at lows, right? Like recent lows. Amazon, okay? Amazon, after its earnings, continued to kind of slip a little bit. I mean, it's not too far off of its highs, but it's definitely some sell-side activity in there. Then we cruise over to Google. Google cracked a little bit lower. What else I got? Okay, obviously Tesla. Tesla doesn't seem to be able to get out of its own way. Down about 6% year to date, well off the lows though. Okay. Meanwhile, at the exact same time, so you have a number of marquee products that are just not performing, but it's all whatever. Why cast a doubt when you're looking at stuff like Apple? Apple just exploded. It's like 2.5 standard deviations higher. Okay. Meta. I think this is about the 18th up day in Meta. Okay. By the way, I put on an in-out spread on this thing today. So that's going to be interesting. And I want skin in the Meta game. Like I literally, I think this is the 18th up day in a row. And I'll be honest with you, I've kind of lost count. I've lost count because it's too many up days in a row. And then NVIDIA is actually staging a little bit of a comeback over here, that 130 level being absolutely critical, and it's now above it. Okay. And it's just wild to see this because it's the marketplace literally fighting itself, where you have, a number of marquee stocks like, Microsoft coming off, like Amazon, like Google, and it doesn't matter. Tesla can't get out of its own way. It doesn't matter because now all of a sudden you've got Apple, you've got Meta, you've got NVIDIA even coming back, and that's what we're up against, this rotation. It's not every stock right now that's rallying. In fact, the irony of today is that we're ending today with a negative advanced decline line. This is like, for those of you that look at like breadth, like the market breadth is not good today, right? I don't really look at that, but I get it. Like the market breadth is not very good today. You can even look at like stuff like Quantix, okay? Not great. I mean, there's some sell side activity actually going on in this marketplace. I can name a ton of stocks that are down, but it does not matter for the S&P 500 so long as you have Apple, okay, and NVIDIA, and a side order, of course, of Meta, because that's really the driver of the marketplace. By the way, speaking of some trades that I've done this week, I hit a number of trades. I hit Roku. Okay, for those of you kind of interested, Roku here in at 43 cents, out at $1.48, 244% return. By the way, I was so close here too on coin. I'm literally looking at it into the close. Oh, I have one on right here. Okay, I got one left. Okay, and we're actually going to close that one right now. So look at this. Okay, close that thing at any price right now, filled. Okay, so I literally have hit 4 out of 5 earnings flips this week. So I hit Roku for 244%. I hit Hood for 150%. I hit Cisco for 173%. Obviously, coin. I made a nominal gain on it, like a nominal gain, but it counts, people. 4 out of 5 I actually hit. In light of whatever you might think about the strategy, let me tell you, trading around the expected move for earnings, okay, absolutely works. All right. Coming into next week. All right. So coming into next week. Well, first of all, we have a 4-day trading week ahead of us. 4-day trading week. Monday, people, is a holiday. So U.S. financial markets will be closed on Monday. But coming into next week, okay, what can we expect in terms of risk? Well, the first thing you do is you got to look, okay, kind of handicap where we were this week. This week, we basically had about a $98 expected move. Boom, we hit it. Like on it, like it's just crazy. We just literally hit the expected move. And I was talking about that literally on Wednesday night's video. I was like, get ready for some volatility, get ready for some movement. Here we are, trading the upper edge of the expected move. But what are we looking at, okay, into, if you will, next week? All right, and survey says you're 7 days out, you have about $70 of movement. Okay, so it's $70, but it's 4-day trading week. Nevertheless, volatility is definitely diminished for next week. It's definitely diminished for next week. You just don't have like a CPI. You don't have as many earnings. Okay. I'll tell you what, in a marketplace right now with the diminished volatility for next week, like a $70 expected move for 4 days, don't sell options. Do not sell short dated options. That volatility for the next 7 days is only at 10.39%. From my seat, it can only really go up. That does not look like a large expected move in the short duration stuff. Okay, there is the closing bell for this week, and I like it. But looking out to next week with a $70 expected move and a 10.4% implied volatility, I'm not selling anything short dated next week. I want to be on the buy side of options. Look, again, as I said to you guys, doesn't matter here. Like we can sit here and we're going higher, we're going lower. Okay, we're going to move next week. Right. Okay. Right on the edge of a big time gamma squeeze. Okay. Monday. Okay. Obviously markets are closed. Coming into Tuesday. Oh, we're going to be sitting on pins and needles. Again, my inclination. Okay. And this is the opinion piece, is that we're actually going to explode a little higher and then implode lower. That's what I'm actually inclined to believe. I'm letting everybody know it. And that's based on a number of factors that, of course, I just went through here, of course, on this weekend's update. Have a wonderful weekend, everybody, and a wonderful Valentine's Day and happy President's Day. Thanks, everybody, for joining us here at TheoTRADE. Bye-bye.